This is Marshall Gittler, Head of Investment Research here at FXPRIMUS, bringing you the day's schedule for Wednesday, December 23rd. It's fairly quiet in Europe today, but then once the U.S. wakes up, there's going to be a surge of indicators that will no doubt affect the dollar, particularly given the thin markets at this time of year. The UK kicks things off at 9:30 GMT with the third and final revision of its third quarter GDP, like we had out of the U.S. yesterday. Both prior readings showed an increase of 0.5% quarter on quarter. Now, any deviation from that number will likely impact the pound. That's it for the major European releases. Then at 13:30 GMT, the U.S. releases three important reports simultaneously: durable goods, the personal consumption expenditure deflator, and personal income and spending, all for November. The consensus forecast for durable goods is for a decline of 0.6% month-on-month, showing some payback after the sharp 2.9% month-on-month rise in October. However, the market focuses on the core figure, which excludes transportation equipment, such as aircraft. That's expected to be unchanged month-on-month after a 0.5% month-on-month rise the previous month. As the figure is a good barometer of manufacturing activity and investment, the dollar will likely react to any outlying number. The personal consumption expenditure deflator measures the change in the price of goods and services purchased by consumers. I know that sounds a lot like the consumer price index, but they're constructed differently. It's expected to be up 0.4% year-on-year, an acceleration from 0.2% year-on-year in October. Here, too, the market focuses on the core figure, which excludes the volatile food and energy categories. That's expected to be stable at 1.3% year-on-year. Now, these two numbers are of key importance because the Fed uses the PCE, not the more widely known CPI, as its inflation target. The Fed will need to confirm the prices are rising before it can hike rates again, so any sign of accelerating price rises is bound to support the dollar, and vice versa. As for the income and spending figures, market expectations for income to be up 0.2% month-on-month and spending up 0.3% month-on-month. That would mean slowing income growth from October's pace of 0.4% month-on-month, but faster spending growth. In October, it was only 0.1%. Oh, and at the same time, Canada releases its retail sales for October. The market consensus is for retail sales excluding autos to be up 0.4% month-on-month. Given that the Canadian dollar has recently touched an 11-year low against the U.S. dollar, any sign that consumers are faltering is likely to lead to more Canadian dollar weakness. Last on the schedule is the Michigan Consumer Sentiment Index for December. This is the final reading of the U of Michigan Consumer Index. The provisional release was 91.8. The market expects it to be revised up to 92. It'll be interesting to see if there's any captured reaction to the Fed hiking rates and the subsequent rally in equity markets. This is Marshall Gittler, Head of Investment Research at FXPRIMUS. Get more market insights on our education pages and turn your trading ideas into action with FXPRIMUS, the safest place to trade.